What is going on, everyone? Welcome back to another video. Welcome back to Neil K Trades or Neil K Trading. Today we're gonna have a pretty straightforward video. This is episode 2 of the trading blueprint, the ICT trading blueprint. What I follow, what I found success with. Just jumping right into it. Today we're gonna be talking about equal lows and equal highs. So quick recap on liquidity that we did last week. Liquidity is pretty much the fuel that moves the market. If you go back, you can see at the top of the range, it's where we have buy stops. At the bottom is where we have sell stops. Anyone who's going short have their buy stop set above there. Anyone who's going long have their sell stop set at the bottom. Anyone who's going long have sell stop set at the bottom. So, if you haven't seen that already, I'd recommend go watch the previous video on liquidity. This video will make a lot more sense if you go ahead and watch that. So jumping right into it, what are equal lows and equal highs? So looking over here, equal highs and equal lows are when you have the same area or the same highs get respected and taken out at the same time. So it's people would see this as support and resistance. I see this as equal highs and equal lows. So like we discussed in the last video, you're going to see a lot of people have their stops up here who are going short, and stops here for people that are going long. So when traders see these, they assume that price cannot break these levels, so they'll use that to set their stop orders. So the thing about equal highs and equal lows is market makers love to target them. So in this case, if you're going short, market makers will sweep out this level before moving in that initial direction all the way back down. And vice versa, they'll sweep out these lows, before moving it back in the original direction. So this is what I like to call a liquidity grab. Market makers or people controlling the markets will grab liquidity here, take out the orders, and then move in their original direction. So pretty much a liquidity sweep like we had discussed in the previous video. So looking at a chart example here, I'm going to use the same day that we used yesterday. As you can see, we pretty much have exactly this. So looking at this, seeing these equal lows here, you'll see that price swept out this low, grabbed all these sell orders, stopped out a bunch of people, and moved it back to this zone. So a lot of people could use this as a potential long. A lot of people will take their orders after seeing one of these get swept, but I would typically wait for more confirmation through different things I will be teaching later in this series. But it is essentially just the same area getting hit over and over again. And eventually you'll see price break out of one of these ranges. So in this case, this was a sweep. In this case, we swept more orders here before moving up and past these levels. So the way smart money uses these levels is to fill their orders. So for example, you have these equal highs here. Market makers will use these areas to fill their orders, to collect their orders, to build up their position sizes, because they don't just go in all at once. They set multiple orders so they could enter here, here, and here before moving price all the way up in their direction. So the way I trade them is I would wait for one of these levels to get swept before looking for a move in the opposite direction. So in this case, we got the sweep down here, but we didn't get a sweep here. We got a sweep followed by a sharp move up. Here we just get a sweep of this level. No sharp move down, we just sweep right back up to this original liquidity. And like I said in the previous video, you're going to use these as magnets. Price will use this as a very strong magnet. So equal highs and equal lows, again, it's just a different form of liquidity, but in the form of the fact that they're going to get hit over and over again, just like this example that I'd shown you here. So next time you see this, don't call it support and resistance. don't think that there's going to be resistance here, because these levels can get swept and continue up, or they can get swept and go in the completely opposite direction. So while this is resistance, you're going to see a lot of people you have to think like the 99% of traders who don't end up making it in the market. They see this as resistance. They think we're going to go straight back down. So if you short this level and you end up seeing this get swept, you're going to get stopped out, and then it's going to go in your original direction. So that's why a lot of people think that their stop losses are getting hunted by market makers. It's just liquidity getting swept. In this case, these equal highs got swept and moved in the original direction. Same with here. People think they're getting hunted. No, it was liquidity getting swept and moving in its original direction that it wanted to go. So yeah, I'm going to keep this video really short because this is just a continuation of liquidity. I'll be starting to teach about my main confluence that I use when trading, and that will be fair value gaps. So yeah, do your homework, study this, see if you can spot them out in the market. I know we've had a couple, we've had a few examples even today of equal highs and equal lows. For example, of these lows and these equal highs. So see if you can use them as an example. Like when looking here, you see these highs, they get swept, moved right back down to these equal lows. Again, came back up here and ended up dispersing out of these equal highs and moved higher. So knowing when to take a long or short here, you're going to need more confluences. So that's what I'll be teaching in the next video. I'll see if I can release it today, or even tomorrow, but yeah, just do your homework. This is the baseline of how I trade. The baseline for everything is liquidity. It's what fuels the market, it's what moves positions, and it's what institutional investors will use to fill their orders. So if you can understand this, you'll be able to understand my model. So yeah, I'm just gonna keep it really short, really simple. I hope you guys found use in this video. Hope you guys learned something. Leave a like, comment, subscribe, and yeah, I got a new microphone, so hopefully this isn't as quiet as it was before. So be patient, be humble. I'll see you guys in the next one.